Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks follow Wall Street higher, fueled by a rally in U.S. small caps. Chinese equities pair gains after a housing ministry briefing fails to convince investors that Beijing can turn the market around. The ECB is expected to cut rates by 25 basis points today, with inflation below 2% for the first time in 3 years. We are live in Slovenia later this hour. Plus, Israel steps up airstrikes on Lebanon, which officials say killed at least 16 people, including the mayor of a southern town. It's just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Well, we got another positive end for Wall Street yesterday. Both the S&P and the Nasdaq inching up into the green, and this as the market continued to digest positive news coming out of the U.S. banks. We'll get to that in a moment, but another blockbuster quarter by Morgan Stanley, and that really led some of the gains in the S&P index. Today, all eyes will be on those U.S. retail sales figures, which will be a big determinant of how the U.S. economy and how the U.S. consumer is doing. But then the Nasdaq also in focus today, leaning towards the red. And surprisingly, despite the huge down day that we had for ASML over in Europe, the stock ended about 16% lower. Other chip makers in the U.S. actually did well. So any chips that have AI exposure or are used to power some of those AI data centers actually did quite well. NVIDIA up about 3% yesterday, Micron up 4.7%. So really what's happening in this chip market is a distinction between the chips that would power old market, old economy versus new economy. We will talk about that in a while with Annabelle Julius, our tech correspondent. Brent also in focus this morning. You can see we're about 0.25% firmer, trading slightly into the green, but still hovering around this $75 level, which has been a key level for the market as a lot of that geopolitical premium has been priced out just in the last couple of sessions. And then the USD, not doing a lot today, but we are about 2% firmer over the course of the last month. Let's switch over, though. I did mention Morgan Stanley right at the top of the show, and I just want to highlight to you now that the stock is now trading at a 4-year high. So just take a look at that. The stock is up more than 135% over the course of the last 4 years, but a big upward trend in just the last couple of months or so. And this is not specific to Morgan Stanley and what we were talking about this yesterday. In general, the U.S. bank story has been very strong for the most part of this year. So that's the chart of Morgan Stanley. But let's switch over back to what has been going on in the chip space. ASML CEO Crystol Energy says he expects the chip market's long-awaited recovery will extend into 2025.
We continue to view AI as a key driver of the industry recovery with potential upside. We see other segments recovering more slowly than anticipated. The recovery will extend well into 2025. Which is leading to customer cautiousness and some push-outs in their investments.
Well, let's get more on ASML's earnings call and bring in our tech reporter, Annabelle Julius. It's great to have you with us. It's such a big day, a lot of movement in some of these chip makers, specifically in ASML yesterday. Lots of questions about why the earnings release came out one day early. But apart from that, which they explained as essentially being an error, what else stood out from the earnings call?
Well, I think to your point that you were just making earlier, Jemana, it really just highlighted the sort of two-speed recovery that we're seeing in the chip space generally. Because on the one hand, you've got all of that optimism around AI chips, and that has continued to play out throughout the course of 2024, despite concerns that we might see it petering out or just tapering off somewhat. On the other hand, you've got demand for the so-called legacy chips, and this is older technology. These are semiconductors that are used in things like cars, consumer electronics, and that has been mired in a slump for quite a period now, and it's still working its way out of that. And that's what really the ASML CEO said played into these third quarter figures and why it had to delay its guidance or cut its guidance into 2025 as well, because customers simply are not lining up for its products given those concerns around the industry dynamics. So that is really the story here. And again, it played out in that share price reaction because you're down around 20% now since the report.
Yeah. How does this set up for TSMC's results coming out in about an hour's time now?
This is going to be really one to watch very closely because, of course, TSMC is, one of the other bellwethers of the chip industry. But the results from TSMC should be pretty strong. We've already had the monthly sales figures that coming through. That's a requirement of companies, just a side note, but they are required to report monthly sales figures. So you do have already a good indication for the final third quarter numbers or quarterly figures. What's going to be really important is the sort of guidelines around profitability and also what the capital expenditure plans are for the business moving forward. So that'll be the key areas to watch. There's also, perhaps we could get some more colour on the ASML numbers through TSMC as well, given that TSMC is actually the biggest customer of ASML's products. And it's saying, our Bloomberg intelligence team, that the sales plunge we had for ASML could actually be a positive for TSMC in the medium term, because it could ease some of those competitive pressures that the company is facing. At the same time, TSMC could be getting better at using ASML's most advanced EUV machines that are essential for AI chip production. And again, that could be a net positive for the company. So, the bulls are really building that case around TSMC, and perhaps it really could meet those market expectations as well.
Yeah, well, not long to go now until we find out. Tech reporter Annabelle Drewlers, thank you for giving us the preview of what to expect out of TSMC as well. That comes out at about 9:30 Dubai time, so 6:30 a.m. London. Now, I also want to draw your attention to another chart that we've been watching very closely on a completely different tack, going back to the central bank theme. And today's a big meeting. We've got the ECB meeting coming up. They are expected to cut 25 basis points. But take a look at what the euro has been doing. Just bringing up the chart now. But essentially, we have dropped to about, we've broken through the 200-day moving average to the downside. Here is the chart, and there you can see it quite clearly. There has been a lot of downward pressure on the euro in the last couple of weeks. So this is why the doves in the market are saying that the ECB will have to cut 25, follow up with another 25 in December. Let's bring in the expert now. Kamal Sharma, G10 FX Strategy Director at Bank of America, joins me around the set. So set the stage for us for ECB. Feels as though dovish expectations really have been building up the last few weeks.
Good morning, Jemana. Yes, indeed. I think this is really a direction of travel for the European data. What we're seeing at the moment is a continuation of manufacturing weakness. Some of the positive impetus from the French Olympics now fading, and price pressures now starting to recede. Also, you can't ignore the fact that the Fed hit the bazooka button with the 50 basis point rate cut, which has really prompted many other central banks to turn more dovish. So we expect a 25 basis point rate cut today, further cuts in December, and then obviously an acceleration into next year.
It's really funny because you said the Fed hit the bazooka with the 50 basis point rate cut, but what has happened to the dollar ever since they've cut rates? It's done nothing but strengthen.
Absolutely. Well, this is one of the key features of the dollar through various cycles of either policy tightening or policy easing. You tend to get the front loading of a dollar move, right? So what you saw is that the dollar really accelerated to the downside from Jackson Hole, coming into Powell, the jobless claims numbers. Then what we saw was the Fed 50 basis point cut. Powell relatively hawkish at the press conference, and not only has the dollar recovered, but also what we're seeing at the moment is US 10-year yields back up 4% as well. So it was kind of a textbook reaction in the way that the dollar reacts through into the first rate cut.
I'm sure the minutes didn't help either, with some members of the committee not wanting to go for 50. But let me just ask you a question. When you look out and extrapolate where the euro could be headed, what matters more, the speed at which ECB cut or where they end up?
I think it's a bit of both. At the moment, the near-term dynamics are all focused on one event, and that's the November presidential election. So what we're seeing at the moment is a bit of risk being taken off the table. Now, looking beyond that, we still think that the dollar will weaken into the end of the year. We have a 112 year-end target. Next year is all about the relative overvaluation of the dollar. So we think the direction of travel for next year will certainly be for the dollar to continue to weaken, but this will be more a valuation-based reaction to the markets rather than the cyclical story.
So are people actively putting on trades around the election? I mean, essentially, you look at the polls and the neck and neck now, Harris-Trump. So how does that translate to risk-taking, or are people just de-risking?
Yeah, I think the most important thing here is that there is a little bit of apathy now, but this has dragged on for a long time, right? Everyone's been talking about this as the big event of the year. Front-end vol is now elevated, so you've got curve inversion where the market is definitely placing some event risk. This will be the near-term driver for markets. US data has been better, admittedly, so this is also aiding the dollar recovery. But really, the market is just in kind of a wait-and-see mode, I would say, at the moment. There's other trades out there that markets are looking like. Dollar China is obviously another one, just given the fiscal stimulus and what potential tariffs may mean for the Asia region as a whole.
Yeah. Before we get there, I just want to stay with Europe also. We had a big move yesterday in cable. The pound's a lot lower than expected. CPI prints. Now people are pricing in a more aggressive rate-cutting cycle out of the Bank of England. Is that justified? And do you think the pound, which so far has done quite well this year, has run out of steam?
I think the sterling's been one of the success stories of 2024. We're still in the higher for longer camp for UK rates. There were some idiosyncrasies with the number yesterday. So we'll wait and see for the next one. It probably allows the Bank of England, as we expect, to cut in November, though admittedly now December is very much on the table. We don't think they will, but the risks admittedly are increasing. Now, as for cable, I think there's 2 points to this. I think what we've been seeing is a very strong cyclical story. So it's been a big tailwind or carry and higher rates and a better growth backdrop. Next year, I think, is about the secular improvement in the UK economy, the potential for enhanced EU relations, and so the Brexit headwinds start to fade. So we're looking for cable to end the year at 135, next year 141, and then into 2026 at 150.
Wow, okay, that's quite a bold call.
Yes, indeed.
Let me just ask you also, you mentioned the China fiscal stimulus. The renminbi has been hovering around 7. The USD, do you have a call on where we go from here?
Yeah, we think that the renminbi will continue to weaken. I think the way that we look at the measures by the Chinese government as damage limitation rather than an attempt to revive growth. So that's probably enough for China, but it's not enough for the global economy, particularly the euro, which is very reliant on export growth, on manufacturing into China. So, yes, we think there will be some more weakness. Ultimately, a lot will depend on life after the US elections, but the call here is that the Chinese economy will continue to grow, but I don't think this is going to be the game changer for growth.
Yeah, great. Well, excellent to talk to you and get your around-the-world view in 5 minutes. Kamal Sharma, thank you so much for joining us today. G10 FX Strategy Director at Bank of America. Well, Republican presidential candidate Donald Trump's defense of his tariff strategy in his interview with Bloomberg editor-in-chief John Micklethwaite has fueled debate on the outcomes for the global economy. At the World Economic Forum's annual meeting of the Global Future Councils here in Dubai last night, I spoke with the World Bank's Haddad.
Let's say the Trump tariffs are against China, but China is not exporting products that it produces as a whole in China. They are part of a value chain. All the computers that you see in this room and the phones, and they're all produced probably by at least 20 countries with a production sharing network, maybe assembled in China. So there's a whole value chain that connects countries. And when China faces tariffs, it's going to affect the entire value chain and all the countries that were feeding into the value chain. So that's the first point. Then the Chinese now are investing in other countries. So what we are seeing is that exports from Vietnam, from Mexico to the US are rising. And we think that, great, they're benefiting actually. Maybe they're benefiting. And if you look deeper, you will see that this increase in export from those countries to the US is more correlated with exports from China to those countries than it was before, which means that basically China is leveraging these countries, is exporting to these countries so that they export to the US. I think that the US is starting to realize that as well. It can be direct transfer, or it can be through foreign direct investment in those countries by China, and then they export to the US after that.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Well, Israel has stepped up airstrikes on Lebanon, with the Israeli military reporting the assassination of Hezbollah's head of Qana area on Wednesday. This marks the latest escalation of its conflict with the Iran-backed militant group. Meanwhile, Lebanese officials say Israeli strikes on the town of Nabatieh killed at least 16 people, including the local mayor, Ahmed Kahil. Now, Lebanon's interior minister says the strike happened during a meeting to coordinate relief efforts for the area. The IDF says it hit dozens of targets in the area, including military warehouses, which it said were located near civilian buildings. Israeli jets have also struck Beirut for the first time in almost a week, just hours after Lebanon's prime minister said the U.S. had assured him Israeli attacks on the capital would ease.
They have the right to target terrorists who are committed to the destruction of Israel, who are committed to to murdering civilians. We're opposed to the near daily strikes, and sometimes multiple strikes a day in densely populated areas in Beirut. That's what we saw for a course of 10 days to 2 weeks, and we made clear to the government of Israel that we were opposed to that intense daily bombardment of Beirut, and we saw it dialed back significantly.
For more, Bloomberg's UAE Bureau Chief Dana Khresh joins me now. Dana, just get us up to speed on the developments in Lebanon. Some big airstrikes yesterday in the town of Nabatieh, killing the mayor of the town, but then also an airstrike in Beirut as well.
Yes, morning. Yesterday, we did see the first Beirut strike in almost a week. And today actually marks a month since Israel started the air campaign on Lebanon to target Hezbollah. In Nabatieh yesterday, we saw several airstrikes, and television footage showed plumes of smoke in several areas, but along the same line, hitting the center of the town, hitting the municipality building, killing at least 16 people. That is including the mayor and several members of the municipal council, and also a civil defense personnel. That's, of course, what we call the first responders in Lebanon. So this is one of the heaviest targets on that town since the air campaign started. We also saw in Qana, a smaller village also in South Lebanon, the airstrikes killed at least 3 people. And the situation is getting definitely more devastating. And we saw the health ministry yesterday reporting the first cholera case in Lebanon, and that is because of the conflict. I mean, you can imagine 1.2 million people crammed in hundreds of shelters and even scattered around the country. In Beirut in specific, you see a lot of people setting up their own tents along the coastal line where, people used to exercise, work out, have coffee along that coastal line, and now it is filled with tents. And the government really doesn't have enough funding to meet the demands of the millions of these displaced people, and relies heavily on aid workers to distribute food and even mattresses.
Yeah. Well, Dana, I mean, this also comes on the heel of the U.S. and the UN starting to apply pressure on Israel to do something about the humanitarian aid situation in Gaza. And increasingly, you just highlighted for us what is happening in Lebanon. 1.2 million people displaced. That's a quarter of the country, 1/4 of the population now displaced. The government is lacking funding to provide some of the humanitarian needs. What assistance is coming through from the international community?
So there are a lot of planes and so-called humanitarian bridges that have been set up, especially by countries like Saudi Arabia and the UAE. They've really come for the help of Lebanon. Now, these two countries in specific, Gulf countries, they are against Hezbollah, and some of them have actually listed the group as a terrorist organization. But they are for Lebanon, and that's because there's a significant chunk of the Lebanese people who are against Hezbollah and who oppose Hezbollah's presence and arms in the country. And so we saw the UAE pledging about $120 million in aid for Lebanon. And like I said, Saudi Arabia has set up those bridges. Now in Gaza, especially in northern Gaza, this is even more devastating, right? This war has been going on in Gaza for a year now. In Lebanon, it's been a month. And we saw yesterday the UN accusing Israel of deliberately blocking aid or humanitarian assistance into Gaza. And even the U.S. is now ramping pressure on Israel to allow aid trucks coming in. Yesterday, and a day after we saw the leaks from the U.S. threatening Israel to block U.S. military assistance if aid is not going in, we saw Israel now allowing 50 humanitarian trucks. So it might be improving.
Yeah. Yeah. Bloomberg's UAE Bureau Chief, Dana Khlish, thank you very much for the latest. Now, coming up, the Kenyan Deputy President's impeachment trial begins. He learns his fate later today. More on the allegations he's facing next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Kenyan Deputy President is expected to face a vote deciding his fate later today. Rigathi Gachagua appeared before the country's first impeachment trial for allegedly stealing public funds and making inflammatory remarks to stir ethnic hatred. Gachagua is denying wrongdoing. So for more, Bloomberg's Ndiro Ganga joins us from Kigali. Ndiro, just talk us through how this is shaping up and what is likely to be the outcome for the Kenyan Vice President here.
Jumana, so the Senate proceedings take the form of a trial chamber, and the prosecuting lawyers made a case against the Deputy President on grounds of abuse of office. The Deputy President, who was present, said that he is not guilty of what he's being accused. He took a not guilty plea, and his lawyers mounted a spirited defense, almost as if to lay grounds for court proceedings if this decision does not go their way. These proceedings will be over a period of 2 days. A decision is expected Thursday evening, and political analysts expect that he's going to be impeached in the Senate too. This whole process has been well orchestrated, so it's too late in the process for the chips to fall out of place. They'll need 2/3 majority, and should he be impeached, then he's going to take this to court. He has maintained before that he's not going to resign. He's going to fight till the end, and he has shown every step of the way that that's exactly what he's going to do.
And Ndiro, just very quickly, what is the fallout? We talk about political stability if he is impeached.
Well, there is set to be some form of political discontentment, which could affect legislation, because now the two opposing sides will be out to shoot down any bills and proposals that come on the floor of Parliament. They're also likely to start charging the environment politically to try and win the grounds and win political support. On the economic front, it's a distraction, because Kenya right now should be focusing on job creation, revenue generation, and also stabilizing the economy.
Yeah, that's exactly it. It's political turmoil the economy doesn't need right now. Bloomberg's Ndiro Ganga in Kigali. Thank you very much. All right, let's switch over, take a quick look at markets before we head to break. And equity futures now are leaning towards the red. So we've got S&P and NASDAQ both down about 0.2. European futures down 0.2 as well, as the market there continues to digest the fallout from both ASML yesterday and LVMH. There were big down performers. And of course, ECB meeting to watch out for as well. We're going to have a preview for that in just a few moments. We'll be live in Slovenia next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks follow Wall Street higher, fueled by a rally in U.S. small caps. Chinese equities pair gains after a housing ministry briefing fails to convince investors Beijing can turn the market around. The ECB is expected to cut rates by 25 basis points today, with inflation below 2% for the first time in 3 years. We're live in Slovenia later this hour. Plus, Israel sets up airstrikes on Lebanon, which officials say killed at least 16 people, including the mayor of a southern town. It is 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. A better end for Wall Street yesterday. Both S&P and NASDAQ actually ending in the green. Better bank earnings. Morgan Stanley, the outperformer yesterday. United Airlines also coming through with better results. So that gave a bit of a boost for these blue chip stocks. But of course, keeping a close eye on all of the fallout from ASML yesterday. That stock, a big decliner in the European session. But actually, what we did see in the U.S. was other names, the likes of Nvidia, Micron, all actually ended up positive on the day. So we were speaking about this earlier on the show. There seems to be somewhat of a divide growing between some of the chip makers servicing serving some of those old economy and some of the chips that actually go into serving those AI data centers, which are tending to do quite well. So that's the picture for today. The handover from Asia, pretty negative. You can see S&P and NASDAQ futures leaning towards the red today, down about 0.2%. Brent still hovering just below $75 now. We have pulled back away from those $80 levels we reached a week ago, down about 4%, but today flatlining, basically up about 0.2%. And then the USD also in focus, not doing a lot this morning, but of course over the course of the last month or so, it is up 2% versus other currency pairs. We'll get to that in just a moment. But before that, I spoke about U.S. banks. I just want to highlight for you Morgan Stanley stock right now sitting at a 4-year high. So you can see just throughout the course of this year, it's been a stellar year for Morgan Stanley. The stock is up around 28% throughout the course of 2024. But the theme so far from the bank's earnings season is one of strength. And these banks are beating on both trading revenue and also on net interest income as well. So it has been a pretty solid start to this earnings season from U.S. banks. The other the other item on our agenda today is also the ECB meeting that is happening later this morning. The market is pricing in a 25 basis point cut, but in the run-up to that, take a look at what's been happening to the euro. We talk about the strength of the USD. It's putting downward pressure on the euro, now sitting below 200-day moving average, trading at a handle of about 108. So downward pressure as we head into the ECB meeting. But before we move on, let's also just get a test for how Asian markets are faring. Avril, people were watching out for this briefing on the China about the housing situation in China. But again, once more, it seems to have fallen flat. Tell us more.
Yeah, I think it underwhelmed investors yet again. But again, this bar was really high because you heard how local media reports were suggesting that this is going to be packing a heavy punch in terms of what we could expect for the property support measures. But ultimately, even though there were some of these so-called helpful measures in the form of the expansion of a credit program, so-called whitelist to help developers to finish uncompleted projects, it wasn't the big bang stimulus that some might have hoped for. So we saw the Hang Seng pairing gains of as much as 2.5% from much earlier on in the session. But it is also a pretty cautious picture in the rest of the region as investors look ahead to TSMC earnings just a couple of days after ASML sent shockwaves through chip stocks. Now, TSMC does have a couple of things that is going for it, including some optimism surrounding the NVIDIA Blackwell chips, Apple's iPhones. It is, as you alluded to a short while ago, a company that services the new economy. But given how high the stock is trading, as our MLife strategist Mark Cranfield put it quite well, it will be needed to be something near perfection in order to not get harsh treatment from equity investors. Jumana.
Yep, all eyes on TSMC earnings coming out in about an hour's time. Thank you, Avril, in Singapore. Well, we spoke about U.S. banks, and we're just beginning to get some of the earnings crossing through from the European continent now. So Finnish bank Nordea results have just broken, and the third quarter net interest income has come in line with expectations, 1.88 billion. That is bang in line with what the estimates were. And then we had a net profit figure come in at 1.27 billion. So that is higher than what analysts had penciling in. So the analyst community had penciled in 1.22 billion. The actual net profit figure they've reported is 1.27 billion. But overall, what we are seeing is that the personal banking net interest income has beaten estimates, so coming in slightly higher than expectations there. But then equally, we are going to turn to some of the results coming from the region as well. Emirates NBD, which is the largest bank over here in the UAE, has also come through with their results, and they are reporting net income in line with expectations, 5.2 billion dirhams. The expectation was 5.2 billion dirhams. Net operating income rather, coming in at 11.5 billion. That is higher than the estimates of 11.1. So we're getting a beat on the top line and an inline figure on the bottom line from Emirates NBD. As you can see, throughout the course of the year, the stock is up 14%. Now, switching over to commodities, oil is advancing after 4 days of declines as traders weigh potential risks to production from the Middle East. Meanwhile, concerns over a global glut are also growing after the IEA reported a decline in U.S. crude stockpiles. So for more, let's bring in Crystol Energy CEO Carole Nakhle, who joins us from London. Carole, great to have you with us. It feels really difficult to construct a bullish case for oil right now. And even with all of the geopolitical premium that we talk about, it's very difficult for oil to sustain a bid here.
Good morning, Jumana. Indeed. I mean, when you look at market fundamentals before the geopolitical developments happened in the Middle East, bearing in mind that there was an ongoing and still ongoing war in Ukraine, sanctions on Venezuela, sanctions on Iran, Libya is not quite stable, Yemen is in trouble. So other regions with major oil producers were already facing trouble. And then the market did not really roll back with vengeance. We did not see prices increasing despite those geopolitical developments. Now, the war happened in the Middle East and the tensions have escalated in recent weeks. Yes, we saw an upward pressure on prices, but we did not see the spikes of the three-digit territory that many would have expected, because we forget, okay, the Middle East is a very important region for oil and gas exports and production. But first of all, there has not been any supply disruption. And also, the conflict has not affected any infrastructure for oil production and exports, but also the market fundamentals are not tight. So we don't have a tight supply, we don't have a booming demand, and there is plenty of spare capacity. When you take all these into consideration, you understand where prices are today, despite the geopolitical risk in the region.
What do you make of both the IEA and OPEC? And OPEC tend to be more positive than the IEA, revising downwards their projections for demand growth for this year and next year?
Positive is a mild word because they remain perhaps the most optimistic about demand growth for this year. And it's interesting to watch the standoff between the IEA and OPEC for this year's forecast for oil demand. But I have the feeling that the IEA is being more vindicated because they were talking about almost 900,000 barrels a day of demand growth as we reach the end of the year. We're not seeing significantly more than that, whereas OPEC is talking about an extra million barrels difference with the IEA forecast. So we continue to see the standoff, but OPEC, for the third time in 3 months, consecutive months, they downgraded their revisions for oil demand as they see the problems in China in particular. Interestingly, the IEA, for example, was referring to the Chinese contribution to oil demand growth. In 2023, China contributed to 70% of oil demand growth. Today, it is barely 20%. So this just puts into perspective the impact of the Chinese economy and the struggle the economy is facing on global oil markets.
Carole, let me put a question to you that perhaps is a bit more medium term, but it's based on that IEA report that came out earlier this week. One of the lines that really struck out to me is that the IEA are predicting that low-carbon clean energy, including nuclear power, by the way, will become the largest energy supply source in the mid-2030s. They're still sticking to this view that we're going to see peak fossil fuel demand in 2030. First of all, do you agree with that assessment? But then equally, does that not paint a picture of the world being adequately supplied from the fossil fuel perspective in over the next decade?
You know, I cannot agree or disagree because these are not forecasts, these are scenarios. So the IEA comes up with different scenarios and primarily based on policy assumptions. And we all know that policies are not cast in stone. And even the IEA tells us in its report that there is much bigger uncertainty than usual when it comes to policies in the immediate term and midterm. So in that respect, any data based on or any outcomes based on policy assumptions is going to be surrounded by great uncertainty. But let's assume the IEA is proven right and we do hit a peak for oil demand in particular by 2030. How does the plateau look like afterwards? And how does the decline look like afterwards? Is it going to be steep? Is it going to be smooth? And I saw different scenarios from different publications. I could see between the best scenario and the worst scenario a difference of 60 million barrels a day, which is 60% of global oil demand. That is a massive range of uncertainty.
Carole, always a pleasure to talk to you. Thank you so much for coming on our show today. Carole Nakhle, Crystol Energy CEO. Now, the European Central Bank is expected to deliver a quarter-point cut today, something policymakers had ruled out a month ago. With inflation now below 2% for the first time in 3 years, this week's decision appears to need little more than a formal sign-off. Let's bring in Bloomberg's Europe correspondent, Lizzie Burden, who doesn't join us from Frankfurt today. She's actually in Slovenia. I'm not going to ask you why you're in Slovenia, but Lizzie, just walk us through why have rate cut expectations sort of centered around not only a 25 basis point cut today, but also another subsequent cut in December of this year?
Well, look, Jemana, this is something that the ECB does do now and then. They hold their meetings in other places but Frankfurt, so hence why today we're in Slovenia. But it's significant. This would be the ECB's third cut this easing cycle. It'd be its first back-to-back cut in a decade, and yet we haven't had that much data between meetings. So as you say, it really has been an about turn from the last one. The focus has been on, first of all, as you say, inflation back below the ECB's 2% target, but also these private surveys showing concerns about the growth outlook, particularly for the private sector. So together that swung market expectations of a cut today. It's been largely endorsed by the Governing Council. The only voice now publicly against a cut today is the Slovakian Central Bank Governor Peter Kazimir, although of course there could be more hawks hiding behind the scenes. But really, as you say, it puts the focus on the path ahead and potentially a cut in December, which is what economists surveyed by Bloomberg and markets now expect.
I get the sense, Lizzie, that people are turning increasingly bearish about the prospects for the European economy, both from growth and also inflation, given the numbers have actually started undershooting 2%. How does that translate for not just what the ECB are going to do this side of the year, but also next year and people's expectations of where they eventually end up with this terminal rate?
Yeah, because the focus is turning from inflation to the concerns about growth. And it'll be really interesting in the press conference if Christine Lagarde emphasises the downside risks. I'm sure that the market would be really interpreting that dovishly. When we think about the rate path ahead, analysts surveyed by Bloomberg expect cuts at every meeting all the way to March, and then another couple of cuts in June and December 2025. So that would take the benchmark rate to 2%. You can debate where the neutral rate is, but it means that the expectation is currently for this next cut in December. In fact, I should say that the Slovenian central bank governor, who's the host right now of this meeting, has said, do not automatically expect a cut in December if they do it today. We'll not be dictated to by the market. So it leaves Christine Lagarde a difficult job in the messaging at the press conference. I expect her again to say that they're data dependent, that they're cautious, particularly in a time when the geopolitics, as you know so well, and the politics around the US election are so uncertain. But I expect the big question for her to be, what is the ECB waiting for? And I expect the answer to be more certainty on the labour market and more certainty that inflation's been defeated.
Yeah, most definitely. Bloomberg's Europe correspondent, Lizzie Burden, thank you so much for bringing us the preview of what to expect out of the ECB today. Well, coming up, leaders from the European Union and 6 Gulf countries have been gathering in Brussels against a background of Mideast turmoil. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Well, the leaders of the European Union and 6 Gulf nations have been meeting against a backdrop of turmoil in the Middle East. The summit in Brussels, which lasted only a few hours long, covered visas and trade, as well as the escalating regional conflict. Let's bring in Bloomberg's Oliver Crook, who joins us from Brussels. I thought it was interesting that the Belgian Prime Minister in the run-up to this meeting said the summit was long overdue. And indeed, this was the first time that GCC leaders actually traveled to EU to meet with some of the crucial EU counterparts. So what was the outcome of this meeting? What were the main takeaways?
Yeah, that's right, Jumana. Long overdue, and particularly in a context where the Middle East and a lot of the GCC leaders are so crucial in dealing with so many of the many issues that are either directly connected to the EU, and I'm referring there to oil and gas and energy security, particularly in the wake of Russia's invasion of Ukraine and trying to get those resources secured in its absence. But of course, in sort of bringing stability to the Middle East on the issue of Gaza, Israel, and increasingly now, of course, Lebanon. And what we did actually get was a sort of joint pronouncement from the two. This wasn't maybe any sort of huge outcome, but it was significant that the EU and the GCC came out together and called basically for an immediate ceasefire in both Lebanon and Gaza. And this is what we had heard from, as you mentioned, De Croo, the Belgian Prime Minister, going into it, but also from the Irish Prime Minister, who said that basically the EU has not done everything it can do in terms of exerting pressure onto Israel. But taking this to the broader context, I mean, I think it's significant because we also had Mohammed bin Salman, the Saudi Crown Prince, here. This was a sort of last-minute piece of information that we got. Significant that he's there, meeting with Ursula von der Leyen and other EU leaders, maybe reflecting the sort of new geopolitical reality and how crucial the Middle East is, and potentially some flexibility on the EU in terms of who they're willing to deal with and who they need to deal with in this new sort of world.
And of course, Oliver, it wasn't just this meeting with the GCC leaders that's taking place. There's a separate EU leaders meeting going on as well. Lots of issues to discuss. Migration obviously is going to be a theme, but what would you say is top of mind for this summit?
Yeah, Jumana, I would say that it's really all about migration and all about Zelensky in Ukraine. Zelensky, who will be here a bit later today. We should also say, Jumana, this is the first EU leader meeting after we got all of these appointments from the new EU Commission. It's the first since the Draghi report was published about European competitiveness, how Europe is really intending to not fall behind in the years and decades to come. But it's also the last one, Jumana, before the U.S. election, which obviously hangs over all of these topics, particularly Ukraine. So what Zelensky is going to do here while he's here meeting with EU leaders, he's going to present his victory plan, which he sort of outlined a bit in front of Ukrainian parliament yesterday. This is all kinds of different sort of new strands that he has been sort of advocating for. Of course, the main point is that he's unwilling to relinquish any territory to Russia, but also calling for an invitation into NATO. This isn't official NATO membership, but showing a willingness to sort of bring it there. He's also talked about deterrence, bringing in more heavy sort of artillery and other weaponry, non-nuclear, within Ukraine to deter Russia in the future. But of course, Jumana, the other point that you mentioned is all about immigration. This is absolutely key, and this is going to be a topic that really Giorgia Meloni is going to try to get in front of. She's going to have her own separate meeting on this, and she, by the way, just this week started deporting migrants out of Italy to a third-party base over in Albania. Is that a model that the Europeans are going to look to in the future? That's what we're going to find out today.
Yeah, Oliver, thank you as ever. Brilliant reporting. That was Oliver Crook in Brussels today. All right, coming up on today's Big Take, China's BYD seems to be winning the global race to make cheaper electric cars. More on what that means for the global auto market. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Now to the global race to make cheaper electric cars, the subject of today's Bloomberg Big Take. It seems a clear winner is emerging in the shape of China's BYD, which is flooding foreign markets with affordable models and catching industry leaders off guard. Our EV supply chain reporter, Danny Lee, joins us now. Danny, first of all, why does BYD cause so much intrigue in America and beyond?
Yeah, I mean, there's so much interest from Wall Street to Washington, and frankly, BYD is causing a lot of terror to the established auto elite of companies out there. And what we've seen is BYD have so much success in China, becoming China's best-selling car brand, and now it's moving overseas in an aggressive way. It's now selling its cars in around 95 countries, already expanded at least this year to over 20 as well. And so what we are seeing is this big push by BYD, and we're seeing then the geopolitics and the competitive forces of trying to slow BYD down at a time when tariffs has become an important tool for the legacy automakers to see if someone which has risen up so fast can be slowed down, frankly. And so when you look at someone like BYD with its wide lineup of EV and hybrid models, its pricing and its lower cost, and also its technology, it is causing a lot of concern when at the time this EV transition for a lot of the European and US automakers, they're struggling. They are struggling and their strategy in disarray. They need some kind of breathing space.
Yeah, with China aggressively coming into the market. I also was surprised to see when I moved to the UAE how many BYDs there were around here. But you also spoke to one of the top executives there, I believe, Stella Lee. So what did you learn from her? And what did we learn about BYD's eventual playbook?
Yeah, I mean, I think the key thing here from the interview is one of resilience, something that BYD, having started from very little to, having very little government support in the early days, and for them having to fight hard to chase potential prospective, clients and suppliers, they've managed to break through. And through all of those years, they've built up this mentality of working really hard to try and, make these gains and make these investments and bets over the long term. And, they've made these bets, especially as they've since listed, to try and put shareholders to one side and make sure that those gains and that shareholder value that they can realize now has been proven. And so therefore, when you see their playbook, they've been entering these markets from in Latin America to Southeast Asia. They're coming in with all kinds of products, not just cars. And therefore, once they establish their presence with consumers, with governments, they're able to make inroads. And especially as they're entering and making success in some of the mature markets like Brazil, like Thailand, like Australia, they're causing concern, especially for some of those established auto players.
Yeah, most definitely. And I was just taking a quick look now. BYD equity is up around 50% this year. BMW, for example, down 27%. So it tells very different stories. Danny Lee, our EV supply chain reporter, very much. I'm going to leave you with a look at equity futures as we head into the European Open. Big day for markets. ECB are set to cut interest rates by 25 basis points. More on that in the next show. But that was Horizons Middle East and Africa. I'm Jemana Versace in Dubai.